Hi, you've tuned into another Jigsaw Tax and Advisory seminar on the implications of COVID-19. Today we will be looking at what we need to do for our self-managed super funds. As a general note, please note that all information given during this presentation is general in nature and should not be relied upon for your specific circumstances without first seeking professional advice. The information provided is based on what is available as at today's date, being the 7th of April 2020, and may change in the future. So, what are the implications for your SMSF with the recent market downturns and economic impacts of the COVID-19 response? Trustees have a responsibility to review the fund's investment strategy, and this is crucially important when we see a market adjustment coming through. We have noted issues with SMSFs that hold properties that tenants can no longer afford to rent, including an announcement from Prime Minister Scott Morrison today that new rental waivers and deferrals for commercial tenants will be impacted by the coronavirus. And finally, looking at pensions and hardship provisions for early access to funds released in stimulus packages to date. The market impact and your self-managed super fund investment strategy. You will need to review your investment strategy due to the downturn and impacts of COVID-19 on the global financial markets. The ATO guidelines on SMSF investment strategies outline that an SMSF investment strategy should be reviewed in the event of a market correction. We have seen a market correction come through with substantial falls across both our national markets and international markets. Auditors are also required to check for evidence of a review under current guidelines, meaning we will need a review of the investment strategy to finalise your SMSF's relevant financial returns for the period of impact. What you can do to ensure your fund remains compliant. Jigsaw Tax has sent a letter to every SMSF client that we hold, asking trustees to review their current investment strategies. A resolution was enclosed with this letter, so all trustees should review their investment strategy. If you believe that your investment strategy still meets your requirements, please sign and return the minute to our offices. If you review your investment strategy and find that your investments no longer fall within the investment ranges, a new investment strategy will need to be prepared to ensure that your fund is compliant. If you are not currently a client of Jigsaw Tax, we strongly recommend that you get in touch with the tax agent or financial planner who assists in managing your self-managed super fund and review your investment strategy in light of the market downturn associated with COVID-19. We have seen significant changes over the last 24 hours for properties held in SMSFs. So just to correct the slides at this point, the government has announced their view on commercial tenancy arrangements and the implications for self-managed super funds. The government has temporarily put a stop to all evictions for the next 6 months for anyone impacted financially for COVID-19, with a 6-month moratorium on evictions that will be legislated under each state and territory jurisdiction. And so far, we have only just received these details on how this will play out. So under the new scheme, which was announced after a meeting of the National Cabinet on Tuesday, landlords will have to reduce leases in proportion to the reduction in the tenant's business. The waivers will have to account for at least 50% of a reduction in business, and deferrals for rental payments that will need to be made must be spread over the remaining time on a lease for no less than 24 months. So for those super funds that are holding a commercial property, if you have a tenant that applies for JobKeeper where their turnover is less than $50 million, the arrangements must be overseen and you will likely see a substantial fall in revenue produced by your commercial rental properties. If this is the case for you, we strongly suggest you get in touch with your tax agent, or if you're our client, get in touch with Jigsaw Tax and Advisory to book a consulting appointment with a specialist. With properties in SMSF continued, the Australian Banking Association's Small Business Relief Package gives businesses with loans of up to $10 million the chance to defer repayments for 6 months. So whilst we see a reduction in income coming from tenants, the banks have stepped up to allow a deferral in repayments for those large loans that you may have over properties held in super. This includes eligible businesses and landlords of properties such as local shopping centres, pubs, clubs and restaurants. The new measures will apply in all sectors of the economy on an opt-in basis under the following 4 conditions. For commercial property landlords, they provide an undertaking to the bank that for the period of interest capitalisation, they will not terminate leases or evict current tenants for rent in arrears as a result of COVID-19. So in that point of your deferred payment holiday, so that's 6 months, you are not to terminate a tenant or evict a current tenant if their rent is in arrears directly as a result of COVID-19. The customer has advised that its business is affected by COVID-19, so that's where we see customers being your tenants applying for the JobKeeper payment or advising to you that they have been directly impacted. The customer was current in terms of existing facilities 90 days prior to applying, and interest is capitalised, meaning either the term of the loan is extended or payments are increased after the deferral period. So whilst we may have a repayment holiday, we do not have an interest holiday. Interest will continue to capitalise and accrue on existing loan balances and will be payable post the deferral period. Now the question is, can I reduce my rent if I lease my property to a related party? Each tenant is going to need to be assessed on a case-by-case basis. And the 3 areas that need to be looked at are Section 109 of the SIS Act, which covers arm's length transactions. This requires a fund to ensure all transactions are at arm's length and are on an arm's length basis, meaning that they are fair and at market value. Section 62 of the SIS Act deals with the sole purpose test. The sole purpose of the investment is in the fund are for the benefit of the member's retirement. So making sure again that this complies, that your leasing and rental arrangement complies with the sole purpose of holding your fund, and that is that it benefits you or the members in the self-managed super fund in retirement. And under Section 65 of the SIS Act, a fund is not allowed to give financial benefit to a member or relative. So that's really worth noting. If you have purchased a rental property within your superannuation and you're renting to a member or a relative of a member, there could be conditions that apply that may prevent you from being compliant in your fund. What do I need to do to ensure my fund remains compliant? So the tenant needs to write to the SMSF and advise they require a rent reduction. This should be accompanied with evidence of the reduction in their income. Again, a substantiation basis for this would be the application for a JobKeeper payment or similar tests that we've seen applied across the board, including a reduction of greater than 30% of the turnover of the client or the inability to continue to operate their business due to a enforceable government directive. The SMSF should engage the auditor to make an assessment based on the evidence to determine if they can provide relief. Once you have approval from the auditor, the trustee should make a resolution to approve the rent relief. Hopefully, the government will address this issue in their rental package when they eventually release it, but at this present stage, this is what needs to happen to stay compliant. It does not appear that the government has released further information regarding what the SMSF has to do in this instance, but we will see more information as the new releases from the Cabinet on Tuesday come into force. For pensions in SMSF, the minimum pension payments have been halved for the 1920 and 2021 financial year. This allows the retiree to leave more money in the fund and not have to sell out investments to pay a pension that they may not need just to meet the minimum requirement. So now we're looking at a new drawdown rate dependent on age. So if you're under 65, you will have a pension drawdown of 2%. 65 to 75, it's 2.5%. 75 to 79, strong 3%. 80 to 84 is 3.5%. 85 to 89 is 4.5%. 90 to 94 is 5.5%, and if you're 95 years or older, it is a 7% drawdown. Get in touch with your tax agent or self-managed super fund specialist to discuss this further if you have any questions. There have also been hardship provisions released for early access to superannuations. To access this, you need to be either unemployed or eligible for the job seeker, the youth allowance for job seekers, the parenting payment, single or partnered, special benefit, or the farm household allowance. So Genuinely, what we mean by this is that you are in receipt of a Commonwealth subsidy to assist you financially. On or after 1 January 2020, you were also made redundant, or your working hours were reduced by 20% or more. Or if you were a sole trader, your business was suspended and there was a reduction in your turnover of 20% or more. If you are eligible, you will be able to access $10,000 of your superannuation in this financial year and another $10,000 in the new financial year after July. Both payments will be made tax-free. Applications will be via an online form that you can complete and submit to the ATO, and you will be able to apply for early release of your superannuation from 20 April 2020. In general, we are here to help. So Jigsaw Tax and Advisory is available across a number of mediums. You can listen to our Money Honey podcast on iTunes, Spotify, or Buzzsprout. You can catch Joanne Macaulay directly at TradieWags via their newsletter, or you can contact us via reception@jigsawtax.com.au. We strongly encourage you to follow us on social media because that's the main point where we're issuing updates at the moment. So if you require advice concerning your self-managed super fund, get in touch as soon as possible. As always, we're here to help.